Welcome to Exchange Rates UK TV. It is 2:13 p.m. Eastern Standard Time on this 31st day of May 2021. Okay, looking at Polygon, MATIC, enunciate. All right. We've got some interesting levels to take a look at here. Really not a huge change from what I talked about on Friday. The primary support level that is nearby in the Fibonacci retracements is at 79.90, and then the 50% level is down at 53.66. We remain above the Tenkan-sen and the Kijun-sen on the weekly chart, and we have not really crossed below either one of those so far this week, but we are just in the beginning of that period. We did have technically a bullish engulfing close up here for last week. However, the volume was lower than the week prior. And this blue vertical line here, I want you to look down below where it's really thin in the cloud. We technically do have a Kumo twist. Now, Kumo twist is generally, I talked a little bit about this last week too, when something's been trending certainly in one direction for a while, and then you get to where the Kumo twist occurs with the current price action, that can sometimes be a warning sign that there is a temporary change. Usually not a broad trend correction, but at least a corrective move or a retracement of some sort. So we should look at that. And certainly when you look at the majority of the cryptocurrency market, MATIC has been a leader in how far it has moved and how well it has performed so far this year. But today we see it really kind of just staying pretty neutral and not really turning green at all that much. Look at the daily chart. We continue to see some signs here that we may be in for some a trip lower. The Tenkan-sen has crossed below the Kijun-sen, and we're right on top of that Kijun-sen, barely holding it as support. So on the daily chart, we should be on the lookout for a bit of a drop. With the volume profile, we can especially look near term here, looking at from the beginning of February to where we are now. Let's actually isolate the trading range from the March consolidation zone to where we are now. And you'll see that the high volume node that exists below where we're at in the volume profile is all the way down here at 85 cents. So from where we're trading at 184 to 85 cents, that represents a 56% retracement, which is very normal in the altcoins. In fact, a 56% retracement in the altcoin market is about as vanilla as you get. You can go deeper. You can get into the 70 and 80% levels. 80% from where we're trading brings us down to the 618 Fibonacci extension and the high volume node on the current chart, where that consolidation zone is at between 36 cents and 43 cents. But we continue to see volume drop, continues to slide south here, which also is not surprising because the weather is getting nicer outside and COVID restrictions have been lifted. And depending on what state you live in, some states have been kind of like the former USSR, and others have been more like, I don't know, someplace not like that. So the weekly oscillators all pointing to some threats to the downside. Though the bounce here, though, on MATIC at 65, that's positive and could continue higher here. I mean, we could just be looking at, by the way, we could be looking at an extension here of a third leg higher. And the point and figure chart really kind of reflects that. So let me just make that a little bigger here. So this is the 2-cent 3-box reversal chart for MATIC. Now, what's really interesting about this, and what I love about point and figure, is that it just filters out a whole lot of the noise. Analysis should take a long time. Analysis should take, a lot of your attention. But when it comes to the trading part, it should be very, very boring. And that's what point and figure is. It is boring. It's also extremely logical. It's the only chart style in technical analysis that can be analyzed, tested, and used, analyzed and tested using the scientific method. And it is a chart style that is only used in technical analysis of the technical analysis of financial markets. What I really like about this 2-cent 3-box reversal chart from MATIC is this condition here. Okay, so we had this column of X's, so prices moving up, then we moved down, up, and then down. So we had a double bottom, these two O's here. We had a double bottom, and then there was a sell signal that was generated when we got down to 176 even. However, it did not continue. Instead, we reversed, but it did not turn into a buy signal up here. That would have turned into a bear trap. We didn't get it. Instead, we reversed, and if we do move back up, we're going to form a triple top this time at 192 even, and the entry would be at 194 even. And the break of a triple top is one of the most ideal setups that you can find on a 3-box reversal chart. The fact that it is coming off of our first kind of congestion zone since turning into a bull market after we were in a bear market. Now we've shifted back into a bull market, at least on this chart. That's something positive. On the south side, though, there's a danger here because we would have a catapult setup, which is very bearish if we return down to 174 even. So definitely great for whether you're long or short, or you're looking for a long or short opportunity. There are two really awesome ones that will present themselves at some point here and hopefully in the near future. So one side's going to get hurt really bad, and I don't know which one it is, but the chart is set up beautifully for an explosive move one way or the other. That does it for me. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.